In other words, if a stock it's trading all day at a certain level, that's significant. That's where people feel comfortable trading, and it's gonna price might get away from it, but it's often gonna retest that one direction or the other. Um, so that's kind of the things that we'll look for. Where is if a stock is actually going up, is it just a quick spike that's going to Icarus and then crash, or is it something that's going to build above that level and because shows that there's real demand at that level. Like I said, price forms consolidation levels, right? We have a buyer's auction, we have a balanced market, and we have a seller's auction. So a lot of the trading day and most of the markets, they're relatively balanced, right? There's a price that most stocks feel kind of comfortable that they're willing to trade at those consolidation levels, and you see price clusters. And then if a price will bounce between price clusters, then they'll either be accepted or rejected. And I kind of, to me, the concept is kind of ladders, right? You have different rungs on the ladders, and if you look at a lot of the charts that I post, I'll have lines at one level, and you'll see it bounce to the level above or fall to the level below. And these kind of consolidation levels where they can be in play for months or even years. So they can be just, so you just leave them on the charts and, it's funny where if you have like a pivot and the stock might have gone away from that for, a quarter or even longer. And then they have an earnings miss. And sure enough, in after hours or something, it retests that price almost to the penny. And then it'll find that demand level. And it's interesting, along that way. And I guess my other thing, and it's probably my most controversial thing because I personally didn't used to believe this, but moving averages are overrated. The price is supported at these congestion points and not just because a 50-day moving average is there. If there's no price support on the chart, the 50-day moving average is just going to get sliced through like butter, just because it's a moving average. It's a kind of an imaginary line of the thing. It doesn't mean that an auction actually takes place kind of at those levels. There certainly are valid functions for moving average that I use. They're great for using to sort trends and that sort of thing. But if I'm buying into a moving average, you're asking for trouble unless there's some type of real support at that level.